Gold gets another boost Friday on more safe haven demand with fears over China's economy dominating the markets. Our next guest just returned from China and says bearish sentiment is reigning for the world's second largest economy. Bloomberg's Ken Hoffman joins us now. Ken, good to be back with you.
Thanks for having me back.
So before we look at gold, I know you just got back from your trip to China, and you said something really interesting. You said that signs of strength are hard to find in China's metals markets right now. Let's take a look at that.
There is no strength. In fact, I met with a steel executive and I said, all right, let's go through all the things you sell. You sell to automotive, appliance, construction. Which industry is doing well? And the guy looked at me and he just said, absolutely nothing is doing well.
Wow.
Everything's falling off a cliff. Construction's down double digits. Auto sales were down 7% last month. It's just, exports were down 8%. Everything right now in China is in decrease mode. We actually think their copper demand for the first time in 30 years will actually decline by 2 to 4%. And we think that this is something that will continue as the Chinese retool their economy for a new economy, which will be more information technologies based, more higher value added based. But those old businesses, steel, cement, copper, are really going to be hurt.
So if the industrial metals are hurting, could this drag and weigh on gold?
Well, I think part of it could. I mean, the devaluation that China took was a real boon for the price of gold. We did get prior, when the Chinese announced that they were going to have only 1,600 metric tons in the central bank, that forced gold down because it was a lot less than we thought and everybody thought. But now they've come out, number one, they've increased that number already just a month later. And number two, by devaluing the currency, if I'm in China, all of a sudden in yuan terms, the price of my gold just rose by 3–4%. It's very positive for gold. People will see that, they'll get nervous, and they'll be buyers of gold.
So Ken, in your latest research, you say gold trading could actually help bridge the internationalization of the yuan. Does this explain the reason that China's been more transparent with their gold reserve holdings?
Exactly. One of the biggest points that China has right now is to make the yuan more global, have it more trading. And what they've said is gold is a great way for them to get yuan in and out of the country. They've set up systems in place to make gold the primary way that you'll get yuan in and out of the country, such as they have a free trade zone where you can store gold. It's not actually physically China, it's a sort of an international free trade point. They're going to have a yuan fix, so you're actually going to price gold not in London in dollars, but you're going to price it in China in yuan. The whole reason for that is to have money flow in and out of the country.
Well, one of the reasons I was so excited to have you back on the show is I really want to get your take on the Chinese gold reserves. A lot of people questioning the numbers, thinking that they should be higher. What's your take on it?
Well, I couldn't find a single person in China that believed that number. Even people who came up with the number sort of were like, well, there's ways central banks can sort of hide gold. There's a bit of an unofficial balance sheet that they can move gold back and forth and sort of be an official number that they show the world, but there's an other category that they can put gold as almost like an investment. And I think a lot of people believe the number they put out there is accurate. They do have those 1,600 plus metric tons, but there probably is more left in that other category. And the fact that just a month later they raised the number shows that they're out there. They're interested in gold. It is a very strong part of their currency strategy, and it's something they'll continue to go forward. So that made people probably a bit more comfortable, a little bit nervous at first, that they put out that number that was lower than we and others thought. But now that they're already starting to raise it just a month later, that they still have a strong and sincere interest in gold.
So you were in China when all this critical news was really coming out. Was there one thing that really stood out for you or surprised you?
The effort by everyone to get the stock market up is crucial to them. Everyone is looking at the government, and the government's ability to hold the stock market together is what everyone was looking at. And that is something I think is key to what goes forward. And when you see the stock market act like it did yesterday and today, it's very, very nerve-wracking for the Chinese because they really honestly believe the government controls the stock market, and when it falls apart like this, they get nervous. Does the government have bigger issues they're worried about?
Okay. Does it worry you, what's going on in China?
It's very concerning. I mean, on a long-term perspective, they are making the changes. The government's making very hard choices for the long term. So I think long-term, this is great for China. In the near term, it's going to be a very painful period as we continue going forward.
All right, Ken, let's wrap with your thoughts on gold. The metal on the move. What do you make of its recent strength?
Again, if China is going to devalue their currency, that is going to be very, very positive for gold demand in China, the world's largest gold buyer, and will be pretty good for gold. So as long as you keep seeing that devaluation, gold bugs will be happy.
Ken, thanks so much for stopping by.
Thanks for having me.
And thanks for watching Friday's Gold Report. We'll see you next week.